country recently announced this week that it will issue a new 10-year Eurobond at a minimum yield of 6.125% and partially exchange the 2017 bonds for the new 2024 notes. For a look at these plans, we are now joined by Samir Gadio. He's an emerging market strategist at Standard Bank. Samir, it's great to have you on the show. I think a good place to start will be to get your thoughts on the pricing of the new Eurobonds.
Good morning. Yes, we still feel that the pricing is somewhat tight. So the 6.125% basically implies a spread of over US Treasuries of around 365 basis points. I must say that there is an amortizing structure for the last 3 years, so that basically makes it a bond with a 9-year average life. So that 365 spread can be compared to around 325 for the Nigeria 23s or 350 for the Angola 19s. And when you look at the relative fundamentals between those countries, frankly, I think Gabon should be trading wider to those economies. So I think the market probably expects Gabon to trade at around 400 over US Treasuries or so.
Do you think that this new issue will be successful?
Well, I think the exchange part will be successful because if you look at the 2017 Gabonese Eurobond, it's actually trading very tight on technical factors because you have selected significant investors who hold those bonds tightly and also because the government has been buying back the debt over time. So the 70s were actually trading at around 235 basis points last week, and so if you exchange your old bonds for the new bonds, then you get a significant pickup. So that part, yes, I think that's going to be successful. Whether new international investors will get involved in the 2024s, I think that's probably more questionable given the pricing.
So you mentioned the 2017 bonds. How does it compare to that in regards to pricing?
Well, I think the 2017 bond was very tight. It was, in fact, one of the tightest African Eurobond in terms of spread in this space. And as I said, it's because really you had a few investors holding these assets, and they didn't want to sell. And then, as the government also bought back about $125 million of the 70s, actually supply was quite limited. But our view, in a sense, was that the 70s were mispriced, and so the risk is now that we price the 24s on a mispriced Eurobond.
So can you tell us what this means for holders of that 2017 bond who plan to exchange it for the 2024 one?
Well, I think the intention is really to reduce the size of the 17s to a critical level. So, if possible, in fact, buy back probably the, maybe even the full note. But it could be that the 17s still exist as a very small note going forward, in which case it will be completely liquid. So, my recommendation for investors holding the 17s will be to go for the exchange, actually.
Give us more information on what the proceeds of this new Eurobond will be used for.
Well, I think the exercise here was not so much actually to raise new money, but more to extend the maturity profile of the country because obviously the 70s mature in a few years, and right now you have a good window of opportunity in global capital markets. So by issuing a new 10-year, you kind of reduce your funding cost and you reduce the rollover risk in 2017. If they can raise some extra money, I suspect that will go into infrastructure projects probably.
Now, you mentioned the Nigerian and the Angolan bond. So are you saying that investors are more likely to go for those than this new one?
Well, I think, that must be nuanced in a sense. All the oil-producing countries have Eurobonds trading at very, very tight valuations. So in other words, we're underweight Nigeria. We kind of like Angola because we feel that it should trade through Nigeria, but even Angola is tight. People might see that Gabon should trade wide to Nigeria, but it doesn't necessarily mean that they're going to buy Nigeria just on the basis of that. I think you want to buy Eurobonds that really offer, higher yields, like a 6, 7, 8% handle or something like that, not below.
I thought the government had plans to buy back the 2017 bonds in cash up to $140 million. Is that plan still on?
Yes, so it's basically they're going to use $140 million from the sinking fund, where I think they have around $180 million at the moment to buy back in cash the 17s. I think that's going ahead, and the price is 118 for a nominal price of 100. So I think the yield at which they will buy back the 140 million will be around 3.37% or something like that.
Now, we actually hear that there are 2 cases of late payment of the Eurobond coupon. So is this something that is likely to affect demand for this new issue?
Well, I think it is a concern which shows that the fiscal cash flow management is not that great, because it happened in 2008 and in 2012. And in fact, if you look at the overall fiscal position, it has deteriorated in recent years. So in 2012, Gabon posted a deficit for the first time. There's going to be another deficit in 2013. 2014 is a bit more questionable, because according to the IMF, the deficit will persist, while the government seems to suggest that they will be able to consolidate and get back to a surplus. But yes, I think fiscally speaking, and in terms of external debt to reserves, I think Gabon looks weaker than the other oil-producing countries.
Tell us a little bit more about the country's fiscal standing then.
Well, I mean, in terms of funding, they have started recently actually to raise money onshore by issuing treasury bills at very, very low rates, so 2% or so, because actually there's a lot of liquidity in the CMAC zone and very little assets to buy. Externally, actually, their debt is not that significant. When you look at it, I think external debt is 15% of GDP or so, domestic debt 5%. So it's still quite sustainable, and they have room to borrow. I think the issue is more that when you look at the ratio of external debt to reserves, it is quite weak. I mean, they have $3.2 billion of foreign debt and $2.4 billion of foreign reserves. So it's not that great compared to other countries like Nigeria, Angola, or even Congo-Brazzaville.
We've seen a lot of international bonds being issued this year. Apparently, it's reached a record high of $8 billion this year. Now, do you think this is something that's likely to continue in 2014?
Well, at least probably in the first few months of 2014, we're likely to see that same trend persist. The reason is that we have this positive window of opportunity at the moment. Financing costs might be a little bit higher than in early 2013, but they're still relatively affordable by historical standards. Now, if the Fed starts to taper QE, let's say in the second half of the year, in 2014, that could become a little bit more problematic. So I think a lot of countries will want to come to the market now before QE tapering actually starts. And so yes, the pipeline looks good enough, I think.
You mentioned the trading in the 2017 bond. So tell us a little bit more about how that's trading, and how do you think that this new one will trade?
Well, I mean, to be fair, the 17s were actually a big bond. So initially it was a 1 billion bond before the government bought back part of it. But it wasn't very liquid in the secondary market, much less liquid, let's say, than Nigeria, than Ivory Coast, or even the Ghanaian Eurobond. And because, I think, because it was tightly held by a few group of investors. So the risk is that the new bond will not be liquid as well, if the same group of investors go for the exchange and get the 24s, and if the size is not as big as the 2017 Eurobonds.